mean, just between like me and you, like to learn it, like this is the thing about ebooks and stuff. You have to get the real original book. It has all the graphs and charts, and then you can, as the years go by, you can make notes and marks in the book, and you can watch it, like you can see it happening in real time, right? And it gives you good guidelines for buying and selling, and then not getting FOMO'd in, because it's crazy right now, man. I don't even know what to say. Like it's like I'm actually pretty nervous because the markets are super vulnerable here.
Well,
but,
just to tell you, I started the recording and I suck at editing. So whatever, I think like unless you tell me, Pat, you have to edit this part out there. It's gonna.
Yeah, no, it's cool, man. I mean, I've done a couple of videos, so I mean, people know who I am, and it's not that big of a deal. So you just let me know what you want to talk about, and we're good,
man. Like I don't want to take. I think with you, I could probably talk for hours, but I'm not gonna do that because
I'll start going off in different tangents. So it's better to keep
like
me on a tight leash.
Who's gonna control us? Because I have a tendency also to go all over the place, and if you go all over the place, then we're just gonna have fun. It's gonna be like Joe Rogan of charting.
Something like that. I don't know about that, but yeah. So you just I'll try to do my best and answer any questions you have, and try to help out in any way I can.
Well, okay. So guys, like I think like I didn't even do the introduction. I don't know if you want to do a small intro and just tell the folks out there.
Yeah, I mean, my name is Edward Gofsky. I've been doing technical analysis for about 20 years, since the late 90s, early 2000s. And before Twitter was invented, actually, like I think the good thing about Twitter is I use it for myself as just an online diary to keep my charts, like get them out of my phone in case I lose them, so they're somewhere saved for posterity for my own purposes. And so like before Twitter started, I just keep all the charts and graphs in all my technical analysis textbooks or my Elliott Wave books, and I'd have like hundreds of just charts sitting there. And I knew there was other people out there that must be doing the same thing. So I think like Twitter and stock twits and social media is a really good environment for people that do charting, just because it's not only a good way to share information and get other ideas from other people that have the same interest, but it's a good way to keep them for yourself, because you can sort of see the progression of your work over the years. And I mean, it's definitely helped me clean up a lot of my own trading and over since I've been on Twitter for I think 10 years or something like that. So
wow.
But, yeah, that's basically it.
I agree. Like it's like that's why I started like my bad charts thing. I don't know in what year, 2012 or something, because I wanted a journal. It's like your brain could lie to you, but if you had it in writing, and then eventually you could say, "Oh, look, Pat, how you used to do it. You didn't see that resistance there. Oh, look, how the hell did you like?" Because sometimes folks, because the price goes in your direction, you think that confirms whatever the hell you were doing, but you could just be the luckiest guy on earth, like. And yeah, so you're right. Like it's like a journal, and it's good to have some type of reality check, to see how far. Because I'm sure I'm going to look at my stuff, like even my recent stuff, and maybe in 6 years I'm going to look, oh, Patrick, you were so wrong.
But it's just for me, it's a good way to just it keeps me highly engaged, obviously, and it makes it's just easier for me myself to follow the progression of my work, and to have it there and being able to like save it, and I can put it on different platforms and stuff like that. And yeah, I mean, definitely being able to share the information too with people that sort of find a lot of value out of it. So certainly I'm not the only person that's posting charts with these kind of wave counts, or just classical technical analysis, like the chart, the VIX here, where you see breaking out of falling wedge. And yeah, I mean, this is something that a lot of people are looking at, because the market, in my opinion, is like very vulnerable here. And I personally think that we're at the end of a cycle, but I mean, a lot of bears have been sort of laid out dead in the sun over the last year, especially. So you have to be really careful. But it's just a warning signal, you know. So yeah, I mean, in terms of the general market, I think this VIX specifically is something that should be like high on your watch list, just to see like if we break out over 32.47, I mean, it's gonna be it's not gonna be pretty, that's for sure. Most things will get taken down, even gold and silver initially, because there might be a liquidity event where there's margin calls and stuff. I posted a lot of charts about the margin debt and the two standard deviation. Like, that's all you really need to know. I mean, it's like I posted that. If you scroll down a little bit further, it should just be, yeah, that one right there. Yeah. So I mean, I've been posting this long-term chart of the Dow Jones Industrial Average for years now, and so it definitely helped me when we were like, what I believe right now is that we're in a final fifth wave move, like a major fifth wave, and it's subdivided since the March 2020 COVID lows. And
Okay.
yeah, I mean, oh,
You
go
gotta
ahead, Pat.
explain to me just I know you like you can't okay just these numbers. Okay, the big numbers are the most or the bigger is the secular type stuff, or does it matter? It's just to differentiate wave counts which like are related to one another. Like
Yeah,
one,
so
2, 3, 4, 5, and what's after 5?
yeah, so basically, like when you see the large numbers like that, that's the start of the major count, like the large one,
Yeah.
and then below that you'd have like would be the major wave two low. And so as the Dow Jones was progressing over the years, you're trying to find like where it might subdivide and where you might see like big pullbacks, so the wave count will sort of unfold in front of you to help you sort of give you a guideline of where you are in the stock market. So when you see like when it says the fourth turning here, when you got to like the start of 2018, and then where you're at right now, at the just before the market collapsed in March 2020, we had this as like a major wave three already going in before the COVID, right?
Yeah.
So just as an Elliottian, you knew something was up. Like, plus not just for the wave count, like it's just one tool in the toolbox that you'd use as a technician to give you sort of a guideline. But what we were also looking for is, you can see like the rising wedge that was forming from the 21,000 things, yeah, where you are right there. And it was already like coiling into the apex of the wedge. And you had the potential of a wave three top. This is before COVID. So I know, like for me, I was using that as a signal to like pull back on my position sizing, tighten my stops. And then when COVID hit, like a lot of people were already like hedging themselves, or at least taking money off the table, right? We didn't know what the catalyst would be, but it ended up being COVID, right?
Yeah.
So in terms of like using Elliott wave as a guideline for sort of judging where you might be, if you're close to a top, and then when you add it in with the rising wedge, so you can see the parallel to where we were then to where we are now, and it's very similar. And
Jesus.
yeah, I mean, it's like, if you don't have an Elliottician on your payroll, or if you like don't use it as just a guideline to like where's the wave count, like you don't have to love Elliott wave, but if you have any kind of significant money in the market, like, and you don't ask somebody that has any experience with Elliott wave, like just out of curiosity, where might we be in the wave count? So most Elliotticians would say, like, with the way we are in the market, with all the SPAC mania, the meme stock mania, the crypto mania, the NFT collectible mania, like where would you see where in a wave count would you be, right? You'd be in the fifth wave final blow off. It's right like the same as 99 and 2000, and not to the same extent as 2008, because that was more of a real estate mortgage crisis and a derivatives crisis. But the parallels between now and 2000 is like very striking. And it just basically, what this wave count means is like proceed with extreme caution, because I mean, like this chart says, like inflation is 5%. The government's saying it's 5%. I mean, I'm sure you could get a lot of people on your show who would say like that's 10 or 20%, right? But with interest rates at zero, and we're in the fifth wave, and we're not just in a fifth wave, but we're coiling into the apex of the rising wedge. So
Yeah,
I
I
mean,
know.
I don't know how much juice, like if you're not selling here, like when are you gonna sell? Like most people are in the market to improve their lives. Like I'm trying to get money so I can spend more time in Mexico and in sunny destinations outside of Canada. So like where I have to take profits at some point. I mean, you can't, I'm if you're buying and holding, like at this point, you're just taking on a tremendous amount of risk. So yeah, I mean that's kind of like we're in a major fifth wave top, and then you're kind of looking for if you see it subdivide, like if you see a fifth wave move subdivide, which is what you're seeing here in the apex sort of this rising wedge. I mean, my target is 36,000, but we could have already seen the top, right? And you don't really want to get cute at this point, and we're already in
Yeah.
the middle of the summer, so
It's I always bring it back down to when I'm trapped and is it fear of missing out? I say, what's my risk versus my reward? And this, when I look at this pattern, this is all risk. It's it seems way more risk than the reward right here. These are great, hitting that lower boundary of that expanding bullish wedge. Any of these hits, especially the first ones, you know that there's a magnet, you know that it's going to want to probably go try the higher up. So these are all low risk. And here, psychologically, nobody wants to buy these ones, right?
mm-hmm.
So
That's what be like. You can see like these lows that touched the bottom of the rail here. This one, the first one at 21,700 was a minor fourth wave, right? And then the low that you saw, the COVID low, about a year later, that was a major wave four low. So you can see like what in Elliott wave, the textbooks would say like wave fours are pullbacks, wave fours are corrections, and it fits really well here. Where not only you've got wave fours at different degrees, right? So you've got a minor wave four, which is the 21,700, and then you've got the major wave four low, at 18,200, I guess. And so that gives a lot of credence and a lot of validity to the wave count. So at least from someone that uses Elliott wave, you could say like the pattern fits, the psychology definitely fits. So it's just giving you a guideline. Like it's not Elliott wave gets a lot of bad. It has a bad reputation because people want to use it to like predict perfectly, and obviously like that's not possible. No a form of technical analysis in the market is 100%. So I mean, I just use it as one tool. When you can combine it with classical technical analysis, I think that Elliott wave has a lot of value. And so that's kind of what I do in my own research and my work, and it helps me, and hopefully people can get some kind of value out of it. So yeah, the quote that you just went through with Michael Burry. So like Michael Burry obviously is a hero to a lot of people. I mean, definitely for me, I have a family history of autism, and most people that have read The Big Short know that they talk. The thing about the movie, this is what I like to tell people, is like the movie is only 2 hours long, right? So most people, casual people, they've only seen the movie, but someone like me who's like a Wall Street nerd, like I bought the audiobook right away, and the audiobook I think is like 12 hours unabridged. So like you can see the depth that they go to talking about the characters and actual like what the whole 2008 financial crisis was about, and who actually made out the best. And actually the audio book talks a lot about the people who were big stars that actually wanted to pull money out of Michael Burry, that initially backed them and then got nervous when they couldn't see the big picture like he saw. The book is fabulous, but this man obviously like knows what he's talking about, and because he's autistic, he's going to look at stuff that the average person is not going to see. Like they talk about this extensively in the audiobook, where he would read the most obscure textbooks on the bond market and mortgage refinancing and everything. And most people are like, well, I don't have time for that. I got a family, I've got kids to raise, I've got a mortgage to pay. Like, I'm just going to work 9 to 5. I don't have time to read like a 1,000-page book on the bond market. But because he was obsessed, like that's all he did for like 2 years, right? So when this guy talks, I think a lot of people should at least pay attention. But the reason I posted is because he talks, what he says is it's the greatest speculative bubble of all time and all things, but by 2 orders of magnitude. So if you go to the next chart, which is like the chart of the margin debt outstanding, so I was waiting for a chart like this to come along for quite a while, because I was thinking like, okay, like a lot of people were thinking like even 2 years ago, like this has got to be the same as 2000 and 2008. Like, what kind of evidence do we have? So this chart just came out a couple months ago, and basically what it shows is like the margin debt year over year increase is 2 standard deviations above the mean. So that's only happened 3 times in the last 20 years. So the last 2 times, the first time that you see is like 1999, going into the 2000 NASDAQ bubble top. And then the other time was like 2007, right before the real estate crash, right? And so, I mean, this one chart alone, Michael Burry is saying it's too, it's like crazy times 2, and then this chart is saying it's 2 standard deviations, the margin debt. So when the margin debt starts to unwind, I mean, how much of this market rise in the general market has been sort of created by this insane margin debt, right? Because the Fed is like, pushed rates to 0, and now inflation is 5%. So you have like negative 5% rate, right? And then that gets back to gold and silver and everything like that. But go ahead.
Well,
Sorry, Pat.
is that margin debt like of me and you there? Like,
yeah, I mean, as far as I can see, like this is just a chart of like margin debt in brokerage accounts, right? So it could be like Joe Blow, or it could be like Paul Tudor Jones's guys, or like whoever, the hedge funds that are using margin, and then like guys that are using margin to buy like AMC and GameStop and Tesla and all that kind of stuff. And so like these are just clues. It doesn't mean that the market is going to crash tomorrow. It's just more evidence for the bears. And somebody like myself who's charting it with a wave count, we're looking for stuff like this as just more clues, more evidence, because we're trying to solve, it's like a riddle, right? Like we're trying to solve a puzzle, because I'm trying to extract money from the market. And I don't want the market, like my whole goal is not necessarily to get more money. It's like to protect the money I've already made and to sort of increase that. But I mean, knowing where we are in financial history, like I think a lot of people are going in sort of blind. And I mean, if you watch CNBC or have it in the background, I don't, but people that do, it's not good for your psychology, because they're constantly like they're berating you with the buy and the hold, because it's like I classify it as like bull market advertising, because it's like it's a salesmanship. Like my dad's cousin was a branch manager for RBC Securities in Alberta, and he'd be the first person to tell you like it's a sales job, right? So like I'm an analyst, so like I'm not trying to sell anything to anybody. Like I'm just using technical analysis and like Elliott wave to like extract money for myself and my family, and so we can have a better life. But in terms of like what the margin debt means, I mean, for me personally, like this is something I've been waiting for. It's like sort of physical evidence that I can share around social media to like hopefully help people sort of recognize where we are in the cycle. And I mean, obviously we're in a mania, so it's like you really have to fight your psychology to make sure that you don't make any mistakes. Because I mean, we talked about this earlier, where I think most people won't admit it in the Bitcoin community, but I think a lot of more people have now lost money than made money in the last year in Bitcoin, because once Bitcoin initially got over 40K and then went from 40 to 50 and then 50 to 55 and then 60, 63, 4, the narrative was so strong. The laser eyes was like,
Yeah.
I've never seen anything like it. Like doctors, lawyers going laser eyes. I'm like, guys, like you guys are like doctors and lawyers. Like, do you even know what laser eyes means? Like, I don't think they know what laser eyes means. But these people were like, it's guaranteed to go to 100K. I've got diamond hands, right? And now we're at like 30K, and a lot of these people use the margin, like you see the margin debt year over year. It's not just like equities; they're using it for Bitcoin, for Ethereum, for Dogecoin, for meme stocks, for NFTs. So, I mean, it's this is one of the reasons why I think posting your own ideas and saving the charts for your own future reference, but to also like share it with the community of like-minded individuals is like, it keeps your psychology straight, where you're constantly looking at these charts on a daily or weekly basis, and it sort of keeps you honest. And it's almost like an anti-FOMO, in my opinion.
Yeah.
That's what I use it for sure. Like, I feel quite fortunate actually that like I didn't succumb. Like, I think a lot of it has to do with my gold and silver education going back like more than 20 years, where we're always, I wouldn't say, I don't want to say we as like a community of like silver and gold enthusiasts or whatnot, but I mean, I'm always kind of skeptical of like Bitcoin actually being what say Michael Saylor is like promoting it as. And I mean, that sort of saved me a lot from like FOMOing in above 40K and like helping me take some profits in the Bitcoin miners that I trade when they're in like bullish scenarios, which at this point is not the case. But I mean, yeah, I mean, it's at least the margin debt thing is something that I use just to make sure that you're not like, you want to have a clean balance sheet as an individual. Like, you don't want to have too much margin in the first place. But like, say if you have like, I have a secure line of credit on my condo, right, that I use in situations where if I find an opportunity in the gold and silver space or something like that that I'm very confident in and have a lot of experience in, I might use that to leverage. But at this point where we are, I mean, like, I don't want to have any leverage except like, say I have like long-term call options on silver. Like, that's something that I have that I'm not going to sell. But I've got years on that, and it's actually like not a huge position. So, but yeah, you can see also like the chart of the affordable homes there.
Yeah.
Where that sort of fits to where you can see the margin debt. Like, where was the margin debt top before the market collapsed before now? So it was like 2007 where you saw the last peak of the housing cycle in the chart there, right? So like, it took 10 years to get to the more, like 12 years, right? Like 2008 to now, where you finally seen like a bigger mania in housing than in 2008. Well, like, that didn't really end well that time. Like, where are we going to go now, right? Like, it's I mean, you live in Montreal, like I live in Vancouver, right? I mean, my family's lived in Vancouver for 100 years, so like, all I know is rising real estate. But it doesn't make sense. Like, you have to factor this into any kind of analysis that you're using, because like, people are throwing money in the market because they're looking at their property statement, right? At the end of the year, the government is saying your condo is worth $1 million or your house is worth 5 million. So you're like, well, I'm so rich, like, I'm gonna throw even more money in the stock market, right? Because like, I'm house rich, and then your portfolio is like higher, right? Because the government's like really jacked up the market, like juiced it up. So like, this is the problem, right? Like, this is going back to Elliott wave, where you're in a fifth wave blow off top. The government wants you to put your money in the market because they want to sort of have the illusion that everything is great, because like, they basically like stripped down the economy last year to nothing, right? And so it's in the government's best interest to like have everybody flush, and then like pull the rug, right? Like, okay, like everybody had their chance, and then so you kind of have to look out for these kind of signals. Like, at least I look at it. So like, housing market is all-time high, stock market is all-time high. Like, If you turn on CNBC or BNN, like they're going to be talking about like it's amazing times. I don't know about tomorrow morning, but I mean, as soon as like it recently, like they want everybody to be fully invested, right? And this is the time where you don't want to be that.
I
You
agree.
kind of want to be in the opposite of that.
Oh,
At least you want to be protected, right? Because
yeah.
people work hard for their money. You don't want to just give it away, right?
It's it's when, let's say, when your grandma asks you where to buy, like where like I have one of my friends, he knows I'm doing charting for years, and recently he says, Patrick, I have to open an account. I'm gonna buy
I've had
Dogecoin.
several people talk about this actually with me that know me, and so I use that as a real like
Yeah.
indicator to like, okay, let me go over my work and see where we are in the count, and then see where we are, like where's the margin debt and everything like that. And like I had a lot of people contact me like over the last 6 months about Bitcoin, and then people that would know me outside of like I spend a lot of time in the downtown area of Vancouver and stuff, and the beach area in the summer, and so people know. They're like, oh yeah, I know you know a lot about the market or whatnot. Like I was thinking of same scenario. Like I was thinking about putting some money in. I'm like, don't do that. Like nobody, I actually tell people don't get involved unless you have a real passion for it, because it's like, it's not about the money. Like eventually, like the psychology plays a big role. So a lot of people, like I was saying before, it's just a great example. Like I love Bitcoin because it's like it's not just the money and the way it respects technical analysis and Elliott wave, but like the psychology is amazing, because like just 3 months ago, everyone was like, it's going to the moon and we're going to 100K laser eyes. And now everyone's like so depressed, and like it's never going to go back above 40K. And I mean, the one thing that I thought was quite interesting is, imagine if El Salvador would have came out like 6 months ago, like before the 65K high, like before the IPO that we had in I think it was March was the big Bitcoin exchange IPO, Coinbase. So
Yeah.
like say before Coinbase did the IPO, because that was the top, that was another signal that I wasn't the only one looking for it, because it was the same as the marijuana sector, where you had like the marijuana back in 2017, where the marijuana stocks, they peaked like 2 weeks before that actually went through into law. And so like when it actually became law, then it was already in a bear market. So like Bitcoin was almost already in a bear market when the IPO of Coinbase hit. So I was kind of looking for that. But I mean, yeah, like um, it's it's really interesting the way, like especially like I was saying, Bitcoin, with the way the psychology is. I mean, it's just like these people's psychologies are smashed now, right? Like, and they're grasping for straws. Like you listen to some of these interviews,
Yeah.
if you just looked at the wave count here, like yeah, this is the GBTC that I've been following for years. I use it. I know a lot of like true Bitcoin enthusiasts would just rather open up a Bitcoin account and trade like real Bitcoin, but I'm following a wave count. So like the global, we see at the bottom of when it was 501, the global central banks inject 20 trillion in the bottom of the COVID pandemic. So like that was the main clue, like that I used for myself. And I got, I'm not the only one. There was a lot of people on YouTube that have Elliott wave channels that were following the same count. So we're all sort of using the same count. So knowing that we were like possibly at a minor wave too low, it sort of gave you an inkling like you could see a big bullish advance over the several months. I mean, obviously, I don't think anybody would have dreamed that we would have gone so insane, but the situation was perfect, right? Like you had Michael Saylor come out in the summer of 2020 and say like he's going to put Bitcoin on the MSTR balance sheet, and then Tesla with all their news, and you had so many people on
Yeah.
YouTube talking about like banks are gonna put money in, and so yeah, you had the beautiful like Wave 3 advance, but you can see like when we're getting up to like where the Wave 3 actually finally topped, like you could see like there was a chance that uh, we're at a very high level here, and it's time to be kind of cautious. And so when you sort of combine the wave count that I had with like classical technical analysis, so I don't want to really get into the pitchfork because it's not super complicated, but not a lot of people use it. But I found it really, I actually started using it because of there's a guy that's on stock charts. He's called like Third Eye Open Trades, and he was using a lot of pitchfork analysis, and so I started integrating it into my own work, and I find it quite useful for myself.
Well,
And so it helps with Elliott wave counts for sure, because the major wave 1 at 1740 and the major wave 2 low fit really perfectly in the pitchfork. And so when you got to the wave 3, you were already like sort of I would say like probing the middle area of the pitchfork, which is kind of a warning sign where like the volatility might accelerate. And you can see like the trend line that I had from like I think, that level there and then all the way up. And so once that broke, then you knew you were in like, it was time to sort of pull back. And, obviously there was a chance now when I had the count there that you'd sort of start looking for a wave 4 pullback. And so obviously the longer the time went, the more the probabilities increased, obviously, the longer the consolidation went, that you were actually looking for a wave 4 low. And at least now we're at the bottom rail of the pitchfork, and this area could be an area where you could sort of probe for bottoms. I wouldn't really put any huge money in it because obviously you look, Bitcoin has so much work to do to even like, this is the thing that I find very curious, because like what Elliott wave does is it gives you a real nice guideline of like sort of where you are in the cycle of Bitcoin if you're using it to track Bitcoin. And you don't need to worry about what's China doing, what's all this like hash rate, what's going on, like who's selling, which whales are selling. Like they make it so complicated, and they're looking at stuff that it's definitely not meaningless. Like, but if you just use Elliott wave and classical technical analysis, it really like takes away a lot of the noise, and like you don't have to like grasp for straws or like grasp for a bullish narrative like going forward. Like, just it needs to break that downtrend line first of all, like from 58,000, that downtrend line. Like, let's just get over that first. Like, it's funny where you see guys on YouTube posting videos like Bitcoin's going to 500,000. Like, great. Like, I hope so, because like the stocks are going to go nuts, and the Bitcoin and Ethereum is going to, and the Litecoins of the world, they're going to go insane, right? And so like that's great, but like let's just get over that trend line first, and then we can discuss. Right?
Just like these ones you put here, and there's so much detail in your chart there. It's I feel so privileged, like spending time with you there. You're explaining me this, and you're right. This is what I call line in the sand, and you're right. This is the wake up call. If it doesn't get up above this line, it's like in no man's land here, right? It could fail. Exactly. The pitchfork could fail. Who knows? But if it does break out above this line there, this is really giving you an entry point and a target, which is maybe back to the median line, or?
Yeah, for sure. I would say like that would be an area where you could tighten your stops. Definitely tighten your stops for sure. But also like if you're a long-term hodler, like knowing that if this, like say step 1, we break that downtrend line, first of all, like the line in the sand, if that gets penetrated to the upside, then like all hands on deck. You can start like looking at all the Bitcoin stocks and the stocks like Hive and HUD and like Mara and Riot. Like you'll see it, those charts will start breaking out first probably. But like it gives you a good guideline to sort of get ready in case it does happen. And you don't have to listen to any of the noise. Like, I don't care what China does with their Bitcoin. Do whatever you want. Like, it doesn't affect me personally. Like, I'm just waiting for it to get over that line in the sand. And then we can start, like, trying to, like, extract some money from the market. But, I mean, like, unfortunately, like, the narrative is very hypnotizing, right? Because, like, it makes what they're saying about Bitcoin makes a lot of sense. But obviously the tape, if you're just reading the tape, right, like you're not listening to the noise, you're just reading the tape of the market, it's not good, right? So I mean, it's got to prove it to me first before I put any more money into it, obviously.
The narrative, that's what it's like, such a trap, because when you think about it, man, when the narrative comes out, are you really so privileged that the news comes out and then, oh man, I'm gonna buy all that stuff, man? Some people, some secretaries listening to the presidents of companies, like, well, no matter, like, all this stuff has been priced in way, way, way ahead of time. Like you said, the marijuana, I remember, like, that day there, I got the card in the mail. Marijuana is legal in Canada, and you look at the charts, game over.
Yeah, it was
It's
crazy because I was following that sector for so long, and there were so many amazing like YouTube stars. Like I know Chart Guys, he was all over it for so many years. And so like so much money was made like in 2015, 16, 17. And then when they finally legalized it in 2018, I mean, that was like a major sell signal. And I think a lot of the stocks were already sort of like peaking out just before the actual news came out. And so like I never forget these kind of things when it has to do with the stock market. So I use that same scenario in Bitcoin where you had the Coinbase IPO and everyone was like laser eyes 100K,
yeah.
and the IPO of Coinbase is a new beginning, like it's internet 2.0, and like all these things to craft like the most unbelievable narrative like I've ever heard. Like I was around in 99 and 2000. I was like in my early 20s, and that was when I first started like putting like decent money in the market. And like the narratives for the .com stocks weren't even half as good as what they were, because you're talking about a money standard, right? You're talking about like an asset that's going to replace gold on central banks' balance sheets, right? And like Michael Saylor wants you to believe that like every company in America is going to have Bitcoin on their balance sheet to hedge against inflation. Well, like what's happened in the last 6 months, right? Inflation is at 5%, but Bitcoin's down 50%. So like,
Yeah.
how are you hedging from inflation?
Oh
So
man.
like, nobody's gonna tell you that, right? Like, if you're listening to like a real, like a Bitcoin bull, and I mean that's unfortunately like that. One of the narratives that he was crafting was like, your money, your fiat on your balance sheet is like a melting ice cube, right? So what are you going to do to like stop the melting of your fiat? Are you going to buy like, who needs your grandfather's gold and silver? Like you want the new, like the Bitcoin is so superior. There's only 24 million, but I mean, obviously like there's more to it than just 24 million outstanding, right? There's more debt now than there was 6 months ago from the U.S. government, but like Bitcoin's down 50%, like
Yeah.
from 65K. Like there has to be something else involved there. So I
And
mean,
yeah.
it's a dangerous game, man.
And the thing is, with a narrative, if you buy something because of somebody's narrative or even your narrative, you're a dead man walking, because the moment that narrative doesn't, the price action doesn't comply or doesn't stick to that narrative, what do you do? How do you sleep at night? Let's say the narrative, like you said, there's only 25 million. It has to go to the moon, right? They're printing more money. There's only 25 million or 21, and then it doesn't go to the moon. So how do you explain your wife that you're losing 50% of your money?
Yeah.
Like how
Well,
do
what are
you,
you going to do when you tell your wife that the money that she gave you because you crafted the narrative for her, right? You're just
ah,
regurgitate. This happened to a lot of people. Like you can imagine the thousands of people. Like there was guys on podcasts. Like I know Pomp had a guy on his show from British Columbia in Canada. He was on a show like just before the Coinbase IPO, and this guy was saying like he's in his early 30s, he's an entrepreneur, he's a plumber, he's making really good money, right? He's making like $60 an hour and whatnot. But he's like, oh, I've got all my assets in Bitcoin, right? He's like, I got everything in there. And he's like, Pomp was like, well, what does your wife think? And he's like, oh, my wife trusts me. She's like, oh, you've been doing so good. Like, I wonder where he's at now psychologically, right? Like
wow.
now that he's down 50% from where he was. And I mean, what he was saying is the same thing. He just repeating what Michael Saylor would say, or any of the other like Bitcoin enthusiasts that believe that, nobody should have any fiat on their personal balance sheet, should be all in Bitcoin, right? So
Yeah.
yes,
It
crazy.
doesn't, it doesn't, like, man, I don't know. I have like, just look at the chart, guys. That's why chart was fun. Like here I have the GLD chart that you put up, but it could be bananas, it could be elephants. Worst case scenario, don't or don't attach any meaning to the chart, because right away, uh, like gold or what, like your biases or stories you've heard or what CNBC tells you, they come and interfere, and they're going to hinder you from buying when the opportunity knocks. Look at this, man. Is this a new count? Wait,
So I've had this count for quite a while, but basically, like I've had what I'm seeing right now, where we are in the wave count for gold, is we've had a major wave 4 low at the 157.13 area, and so the initial impulsive thrust, that was a minor. So what I believe is that we're in a fifth wave movement. So I'm looking for like subdivisions within that major move, right? So the correction that we've had it would be a minor wave 2 low, and so it might not be over yet. Like I said, I'm quite nervous actually where we are in the market right now. It's super vulnerable, like very, very vulnerable. The general market, I mean, right?
Yeah.
And so there's no way, like you saw it on Friday, like silver got slammed, right? Like I was looking at going through my charts yesterday, and a mag silver was down 7%. And I have it in my watch list, and I've got a sort of an 8-month long head and shoulders bullish bottom reversal in mag. So the pullback in mag is like, it's reasonable. Like it's not like end of the world, but I mean, it could still fall further, right? And so that's a kind of a warning shot where you're like, wow, like mag's down 7% on Friday, silver's down like 2.5%. The major markets are, the Dow is down like 300 or whatnot. And you've got all these other factors where we are in the wave count, the margin debt, interest rates possibly going up. A lot of the, like Bitcoin's down 50%. So there's a lot of people that are like really gripping right now, like really grasping for straws and like hoping now, like they're not even like, well, I was a trader in Bitcoin, but now I'm a hodler because I'm down so much.
Yeah.
You don't want to sell, right? So there's a lot of psychology that's broken in the market already. And like technically, like we're not even close to a bear market in the general market, but you could see a real slam. So, I mean, we could still have a pullback in gold. We're at 169.41, right? So that still gives us a lot of leeway before we get to 157. So as long as we stay over 157,
Okay.
like this whole wave count is valid.
Okay.
And so basically, like we have another line in the sand, right, Patrick? Like what we're talking about in Bitcoin. So like gold has to get over that line in the sand before I would get like super aggressive, like before I would even get really excited, actually. So as long as we sort of stay above the wave 4 low at 157.13, like this is something that I'm keeping an extremely close eye on, and I'll be posting this chart like it's a weekly close. So I always find the weekly closes to be very useful. I don't want to be a day trader. Like I'll buy and sell a stock in a day if I have to, but that's not I make most of my gains in like longer term time frame, say like 3 to 6 to 9 months. So yeah, like this chart right here, this is from Kimball Charting. He's been on Twitter forever, and he has a lot of good macro charts. So this sort of gives you a big picture view where like we're definitely in a major, like looks now like a cup and handle, obviously. And so it's not out of the realm of possibility that you could pull back to like 1550. I don't really see it, but I mean, look, if you're to be honest and you're looking at what's going on in the general market, I mean, if the general market goes down 30%, I mean, you're going to have to sell something. I mean, the hedge funds that have gold, I mean, this is the only sticky point that I have currently where I'm a little bit nervous, just because I think like we're in a spot where a lot of things can get slammed right now.
So like, let's say that, because that's like my two scenarios right now. Like in my head, there's some stuff I'm looking at, like the Australian versus the US dollar. It didn't make a new high, like on the monthly chart, and all this evidence, gold and silver's kind of weird because silver's like been trying to really hogging that breakout line. But if the markets break down, especially because where gold and silver is versus the Dow, like historically on the Dow to silver or Dow to gold ratio, I'm since like that's why I tell people don't get leverage because that breakdown could happen at any moment, and we saw
Any
it like
moment. Even on Friday, I was actually I wasn't checking it every second, and I have all my orders placed and all my different accounts and stuff. And I follow it, I was following it on my phone as the day progressed. And I know where we are. I have my own wave count, and I know where we are technically in the silver market. So I'm like, I'm not too worried. And then I'm like, wow, they really took it. They really smashed. They really got smashed. But when I was going through all my charts yesterday, I noticed that like if you look at the copper stocks, they just got hammered on Friday. Some of them were down like 7-8%. So you can see like some of the inflation trade, I guess you could say, is like, I wouldn't say unwinding, but there's some money being taken off the table, that's for sure, right? At least in the copper market. So like I'm not surprised that silver was taken aback, but I mean we're still like, in my opinion, as long as we stay over, I think the SLV like 2250 or something like this, we're good. But I mean, just for my own like what I'm doing personally, like if something happens in silver, there's a stock market crash and silver gets down to like 15, like obviously I'm gonna buy a lot more like long-term call options, like 2024s or 2023s if that does happen. But I mean, I can't really see that happening. But I mean, you just have to keep the scenario in your mind as a possibility, just because the market is so vulnerable here. Like there could be a liquidity event at any moment. Like how many hedge funds are like super leveraged? Like remember there was a hedge fund that went under like just 2 months ago. The guy lost like 30 billion, and it's like, oh, no big deal. I'm like, no big deal. It's 30 billion, bro. Like that's a lot of money. Like that money was, before that money was gone to money heaven, that money was circulating in the market, right? That was keeping stuff up. And now that money's gone forever to money heaven, right? So like that's money out of the market. So that's less liquidity. And then it's sort of, you can see how it can cascade, right?
oh man.
So yeah, I mean, you just have to be super careful. That's why I like to post the VIX chart, because like if that thing breaks out, I mean, you're gonna get like Powell's gonna come out and say like, just kidding, like we're back to 2024 on the rates. Like this is the whole mind game thing, right? Like that's why I can't even imagine like what's gonna happen if they raise rates 25 basis points. The market's gonna crash way before they even do that, because they'll just stop buying bonds, right?
It's so weird because it's like rates or the US dollar going up. The US dollar is got like it's putting a lot of pressure on the on the markets also. I think if the US dollar is sniffing out rates going up, the US dollar is going up, then you see the as soon as the US dollar started going up there, the market started uh, like having some trouble or stalling. But this yeah, we need a scare. Honestly, for gold and silver, I don't want a market crash because, like you said, those I don't want a full melt out because I'm gonna get the trolls coming out on Twitter and
Yeah,
it's gonna be too tough.
it's not the trolls. Like it's just like when you're looking at your own, you have to get it. You have to be psychologically prepared for a drawdown, right?
Yeah,
So like I have a lot of call options on silver, but luckily like I don't buy short-term calls. Like you see it, there's some people in the silver community that I respect them a lot, and they have different. We all have different strategies because of our own, lifestyles or whatever, right? Everybody is in the market for their own reason, but I would never buy like options, like short-term options, even out 3 months, because anything can happen, right? But like I know if silver gets slammed that my long-term call options are going to go down, so I need to be ready for that if the general market does get slammed and silver gets taken out, if there's like less liquidity in the markets, right? So yeah, I just gotta be psychologically ready for that, I guess.
uh, there's stuff like this that could happen at any moment. Look at that wick. So during the month, so I don't know what happened back in February 10, but silver just got hammered bad and just touched the three-year moving average, and but by the end of the month, no problem, and and then it just
Yeah.
retire.
Yeah, I remember that time in the market. I mean, it was so crazy. Like right after silver got slammed in the 2008 financial crisis. So yeah, like I like using that chart a lot. That whole like time frame from 2007 to like the 2011 blow off in silver, because there's a lot from a technical standpoint that you can use for like future reference. So it obviously helped me a lot last year when you had the COVID crash, and sort of a lot of silver and silver stocks had a very similar technical setup to where we were in the last crisis in 2008. So, I mean, this is the one thing where I'm not really too sure if silver is going to really get slammed back like sub 20, just because it just doesn't fit with most of the technical tools that I'm using, like not only Elliott wave, but like classical technical analysis or anything like that. But I mean, nothing is perfect, so anything is possible, especially like because the market is so levered up. I mean, this gets back to like what are the intentions of the Fed? Like, do they want the average citizen to be like levered up with housing debt and like margin debt, and like they have them fully exposed to the market? Like they would say, like, if you're 40 years old and you have a family and a house, like you should be like 60 to 70% equities. Well, if the guy's got $500,000 or whatever, like you're talking, he's got like 400K in the general market. Like that's nuts, right? Like he could lose 50% of that in like a couple of months. So
who's left to buy when everybody's levered up? Is that why it implodes on itself? It's like,
yeah, it's like a negative feedback loop, right?
Yeah.
And I think a lot of that, like Bitcoin is a good example of that, where it's like somebody had to sell. So like who sold at 65K? Somebody. Maybe it was a whale, or who knows what it was, right? And so it just kind of feeds on itself, and it's 60 and then 55 and then 50 and then 45, and then China comes in. Okay, now it's already 30 now. And so it kind of just feeds back, and all the margin calls. Like how many people got margin calls in Bitcoin? Everyone.
Jesus.
Everyone did, because they're promoting it like, oh, you can leverage up 100x, right? Or whatever it is. So that's the problem too with the market, with everything levered up. Once the big selling starts, that's the problem. Like if you see the Dow down 1,000 points in a day, that's a real warning shot across the bow. We're like, whoa, like how many margin calls just got executed, right? And then they've got to go through all their portfolios and start liquidating everything, right? So there's a lot of parallels. That's why I'm like very cautious. And I mean, I tell people don't get involved in the market unless you really have a real desire and I guess sort of an obsession with it, or you think you have some kind of tools that can help. But I mean, yeah, like this is the thing. As someone who is hardcore into gold and silver, like even someone like myself who really believes in gold and silver and has had some success with it over the last 20 years, where we are in the cycle of the general market is something that you need to really pay attention to, because it's not going to save. Gold's not going to save you if everyone's getting margin calls, because they're going to have to. I mean, the good thing about gold is it's stable compared to those other assets. It's not a paper asset, right? It's a solid physical asset that's been around for thousands of years. It's not a sort of like Wall Street paper, but still, like you might have to sell it to like pay off your other loans or whatnot. So it's just something to keep in mind is all.
Yeah, for gold, either you have some before, but yeah, if that liquidity crunch comes there, I see it as another final opportunity to add some before the real write up.
For sure. Like if you ever saw gold like at like 1,500 or 1,400, like I definitely try to get some physical. Physical is a whole different. I'm not the right person to talk to about physical, because like when you look at the premiums right now, like look at silver, for example, like why would I buy an ounce of silver from a dealer and you're paying like a huge markup? Like say silver is at 25 or 24 in the futures market, but you're paying like 32 for a 1 ounce coin. Well, what? Like you look at how much like silver could go up to 28 or 29 and you're still not making any money off your coin, right? So like for me, I would rather buy long-term call options, because the calls could go up like 6-7 times that, and you don't even need that kind of movement. But yeah, like if silver ever got down to like $14 again or like that, I would buy a ton of like long-term call options and like look at some silver stocks. Try to buy some physical, but remember last year when silver got to 14, you couldn't buy a bar for 14.
Yeah,
they were still $25.
Check it out, Edward. I went on the Wayback Machine. Did you ever see this website where you could see websites, how they look back in 95, 96?
Oh yeah,
It,
probably.
and I went and I put gold money or one of these sites. I wanted to see if they were selling at spot in 2008, and the prices I saw, it was above spot. So you're right, it wasn't the stuff that we're selling there. There was like a $1 or $2 premium over spot at the bottom of the abyss, you know. So
Yeah,
yeah,
it's crazy. Like, yeah, just the in terms of bar like physical silver between like say stocks or options, like I have physical silver for sure, but like going forward, if silver does collapse, I don't know if the premiums are going to come down. I mean, I hope so. Gosh, wouldn't you love to buy like a silver bar for actually what the futures market says it is? Like, I would
well,
love to buy like a 10-ounce bar for like whatever the price would be, like say $20, but like it's very hard because the
it's
market is
hard.
so tight, right?
No. You could. I bought at before all this craziness there when I saw gold breaking out in 2019. I went at Kidco in downtown Montreal. I bought myself some silver, and I paid like 25 cents over spot there. Like I don't know, 16, $17, whatever it was back then. But
Yeah,
that was
with the gold
before there was no attention on silver back in 2019. Nobody
for
cared
sure.
about silver.
That's right.
But now like it's finished there. There's Wall Street silver and the premiums all
Oh,
over the
for sure.
place.
That's a good point that you're making, actually. Like, because I look at the premium for gold and then the premium for silver bars, like casually, like I'll just say, oh, I wonder what the price is for, like, how big is the premium for both metals? And like, yeah, you get a way better premium in gold than you would silver. Like, silver is ridiculous. Like, sometimes the premiums are so large, it's like you can't even, how are you even going to make money in it? Like, I know it's a different thing. Like, if the whole system collapses and you can't get it to your bank account, then like you could just barter with your silver. Like I get that, but I mean, if you're just trying to like take out some money out of the market, just trading, then
Yeah.
I think you might have, if silver does collapse or there's a big pullback, right? Not a collapse, but if there's a big pullback because of some liquidity event, then you might have better luck making more money in like stocks or options long term than you would trying to like go to your dealer and be like, oh, is today the day that the premium's lower or
Yeah.
something like that. But
It's
like I said, I'm not the right person to really talk deeply about like premiums on metals.
yeah,
So,
me neither. I'm a chart guy, and I don't know. When I saw gold breaking out against the Canadian dollars in 2018, I said,
yeah,
"Holy Moses, man, something's
yeah,
happening."
that was a beautiful chart back then. I remember
Uh,
that was the really one of my early warning signals that I was using, where because that broke out before the actual like gold and US dollars broke
yeah,
out. The pattern was way cleaner too, right? It was
yeah,
just a different, cleaner, much more crisp setup. And so that was something that I was using. And that was a clue too, because you're like, well, it's like that was way before COVID, right? And so you're like, why is gold acting so nicely? What's the problem? That's why I like gold, right? I mean, gold was, we could go on for days about this because I know like you're as passionate as gold as I am. And I use it as like a signal, like a radar detector, right? Because if gold's moving up and the economy is doing great, well, like what's the issue here? And that helps you dig deeper, and that definitely helped me out a lot in leading up to the COVID because I was almost all cash, and obviously I had some silver options in that, and it was funny because at one point I was like, oh, all my options are going to expire worthless at the bottom of the mountain. Like, there's no way that silver's gonna. I just wrote it off. I'm like, oh, no big deal. That's the options market. You can't win it all, right? You're never gonna get all your options right. But I mean, they eventually all came back and they all went positive. But I mean, at that time, like, gosh, like you, who knew? Like nobody knew the bottom there in the depths. But
oh,
yeah, I mean, it's crazy. It's
oh
crazy,
man.
man.
I just knowing that the market discounts in advance, and like you said, gold broke out before COVID, before all that. Right now, what it's telling me, I like this pullback because it's pricing in the whatever good news. There's nothing bullish. There's no bullish narrative for gold getting priced in right now. When gold starts moving up, then it's going to be sniffing out. Okay, we're not out. Like there's something else around the corner. You know?
Oh, for sure. I mean, if there's any kind of problem where, say, if unfortunately if the COVID numbers start to tick up again, or
Yeah.
there's any kind of variant, uh, then I mean they're going to have to print more money. They're going to have to extend the benefits. I mean, this is the whole thing where, like, as a technician, obviously I'm reading the tape every day, and I'm just looking at, I'm not listening. I don't have CNBC on or BNN. I don't even listen to that because it's just, it's going to wreck your psychology from a technician standpoint, and that's my own opinion. But I want to keep my psychology just on the charts and that. And if gold starts to move here, then obviously, like, it's telling you that there's something deep in the economy underlying that's not being seen yet by the majority of people, and that the Fed's going to have to do something. I mean, it's just so funny. Like, when gold got slammed, like, what, a month ago or a month and a half ago, when they came out and said, like, it was the Fed day where they're like, okay, well, we might raise rates earlier than anticipated. And then you're like, well, when are you saying? Like, next week? No. Like, instead of 2024, it's 2023. Well, it's still 2 years with zero rates, right? And so, like, this is kind of where we are. It helps you sort of visualize, like, how crazy of a market are we in, where the Fed's telling you they're not even going to raise rates for 2 more years, but then the market panics and crashes, right? For that one day, that one day. And then the general market came back, but gold and silver haven't broken out to new highs, like, at all, right? Silver's kind of tried to stay above, say, the SLV is what I'm using as a proxy. So it's like 26, 25, 24. Now it's just below 24. It's like 23.75 or something like this. Where, like, yeah, like, if silver breaks out above 28, then yeah, they're going to have, that there's a problem with the Fed, and they're not going to be able to raise rates or anything like that. I can envision them doing that, but I mean, like you were saying, like, gold especially is sort of like a flashing red warning signal if it's going up, and especially if the general market's going down. So yeah, man.
Yeah, that's why, like, I see gold as it sniffs out incoming monetary imbalances. So if the market, like, I think now the Dow or the Russell going down 15%, that's the catalyst that's gonna make gold go crazy. As soon as the more the Russell corrects, man, so the gold's gonna start sniffing. Okay, so the Fed will have to print even more, because it's reacting to that Dow starting to falter.
Rates, that's for sure. Like, I posted the chart of the Russell 2000. I'm keeping a really close eye on it, because, like, that's where a lot of the speculative money has been. I don't know the exact composite of off the top of my head, the top 10 holdings in the IWM, but I mean, a lot of it was sort of I know GameStop was in there and some of the other ones. And so, like, yeah, this chart here is something that I'm keeping a really close eye on, because you can see the VIX on top and it's coiling. Yeah. It's already broken out of the downtrend line, right? So the volatility is already breaking out, and the IWM is breaking down. It's already, like, probing that uptrend line that's been intact since, like, January. So if that, say tomorrow morning, the market opens lower and closes lower tomorrow, then this whole trend line will have been broken in the small cap ETF. And that's, like, huge warning sign. Like, a lot of the froth has been in small caps, right? And so, like, that's a lot of liquidity being sucked out. And a lot of people aren't going to be in the buying mode for stocks, right? They're just going to be like, a lot of people are underwater, right? And this is a big chart signal, actually. Like, this is a really interesting, like, potential long-term top in the small caps. And, like, I don't know how much money it's going to take. Like, what is it going to take for the IWM to break out over 233? I can't even imagine, like, what kind of bullish narrative. I mean, definitely, I think the Fed would say, like, we're not cutting rates now. Like, then maybe the small caps can come back. But a lot of money we talked about, like, how much money has already been lost, right? I mean, look at the meme stocks. Like, look at all the apes that have, like, got crushed in AMC, right? I mean, it's crazy. Like, we could go on and on about it, but, like, what's going on now is, like, this is the problem that the Fed and, like, people that are involved in, say, like, people in a leadership position, let's just say, in the economy, that are supposed to be leaders, and they're encouraging people to, like, be all in and put their money and have faith in the stock market. The market always goes up 8% a year every year, like, on schedule. And where we are in the cycle. I think I don't really know if they realize the negative consequences if the market really pulls back here. A lot of people are going to be even more mad. The people are already stressed, right? I mean, people are already on edge, right? People had to get a second shot just to leave Canada and all this. And so they're like, think about what's going to happen if the housing market even not crashes, right? In 2007, it didn't crash. It just stopped going up. Like I was listening, actually, I have an audiobook of the Reminiscences of a Stock Operator, which is like a pseudonym for Jesse Livermore. It's like an autobiography of Livermore. So I've listened to it like a million times, and I listened to it like, it's like a 12-hour audiobook. So it's like you're getting way more information than like a 2-hour movie. And he talks about this sort of same sort of scenario where, I mean, people, once people start selling and the selling sort of cascades on itself, I mean, it's just like the game's already over, right? In the sense that like people aren't going to come back, like a generation of investors that sort of get sucked into this narrative. Not just Bitcoin, right? It's everything, right? And so like if housing just stays, if housing just doesn't go up anymore, and if the stock market just goes sideways for 6 months, like what Livermore was saying is like when you're in a bull market and everyone's making money, you don't need the market to collapse. You just need the market to go sideways and for people to lose interest. And then that's where you start, people get bored. Like the average person that's not like a stock market like obsessive or like somebody that like runs money or whatnot, say average Joe that like just got in the last 6 months, where like he's used to the market going up every day. And so when it starts just going sideways, that's where you can see a problem where you're going to lose a lot of the general money. And then that's when people start selling, like, I'm bored, I'm going to sell. And then that's when the selling sort of starts, like, sort of how you can say, like, it's a negative feedback loop. Like somebody sells because they're sick and tired of waiting for it to go up. So you get those sellers. And then you're going to get people that get stopped out because they're technical traders. So all the stops will get set. And then you're going to get margin calls after the stops are hit. And then you can see how it can feed on itself when you're like, margin debt is 2 standard deviations above the mean. So it's just gonna, it's in the leadership's best interest to like keep the markets elevated as long as possible, because when it starts to unwind, that's when the problems, that's when sort of, what does Warren Buffett says, like you only know who's swimming naked until when the tide goes out. So the tide hasn't gone out yet, right? So like I'm always waiting for like, when's the next accounting scandal? Well, you're not going to find it until, I'm always waiting. I'm like, when's the next? I'm so excited. I'm like, I really want an accounting scandal. Can you have one? Well, you're not going to get one until like the market collapses and then you have another crisis. And then people are going to be like, oh, let me see the books. Nobody cares about the books right now, right? Where everyone's still, the markets are up high and real estate's high. And that's why I like to post that chart about where we are in the real estate, because it helps sort of see like where we are psychologically. And people are like, yeah, like if the market just goes sideways, even, you're going to have an issue here. So that's sort of what I was trying to get at. I was kind of fishing in my mind, like, oh, what was I hearing Livermore talk about today? Like when I was listening to him talk, like, okay, yeah. Because there's a lot of parallels in the last 2 chapters of that book where it talks about how he was seeing like the major markets in, I think, the 20s. And there's a ton of parallels where Livermore was saying, like, look, the market doesn't have to crash for there to be a situation. Like, it could just go sideways and you're screwed, because people are so leveraged, they're going to get called on that, right?
So the boredom, so we don't even need a COVID or a black swan. Just human boredom is going to kill the markets.
Well, yeah, because exactly, like that's how I kind of look at it.
Smart.
Because like it's just there's so many new people in the market, right? The market, like I said, if you're in a leadership position and your country is in a world of hurt because of a pandemic that's nobody's fault, but the economy's in the tank, you want people to take their fiat and put it in the market because it makes the economy look better, right? So now that the economy is trying to heal, now you might see where there might be some issues, where there might be some cracks starting to form. And that's why, like when the Fed said, we might think about raising rates in 2023. If that's okay with you guys, we're thinking about it. And then the market crashed, right? For one day, the Dow was down 700 points and gold got crushed. So like they're testing it, they're probing the market to see like, where are we here? Well, they're screwed, right? Like they can't, if they even tried to raise rates, because there's so much, I don't know how they're, it's not my concern. I'm not really, I don't care what they do. Like I've set myself up personally where that's not really a factor for me. I can still go down to Mexico and Central America, like in the winters or whatever. Like that's not going to stop me. But for the average person that has sort of been fed this narrative where everything's under control and look, housing has never been better. Well, great. If you're a homeowner, that's great. But I know a lot of people, especially in Vancouver, like I have two brothers. They don't live in Vancouver. They live in Vancouver Island because they're trying to raise a family. And it's not possible for them to have the kind of lifestyle they want in a major sort of like international city, right? So, I mean, housing is not affordable for most people. And so what's happening, right? Oh, I can rent, but then what, any extra money I have, I'm going to put it in the stock market. Well, like that's crazy, right? Like from the government standpoint, like they want you to do that because like it helps everyone, right? Like your money maybe will elevate the market. So the average person will look at the market. Maybe they lost their job, but the market's up, right? Housing is high. So everything's good, right?
It feels like a Ponzi scheme.
Well, I'm pretty sure like a lot of people that are going to listen to this show and people that you know, I mean, a lot of people would tell you that it's a Ponzi scheme. I'm not here to say, who knows if it is. I'm just here to like, it's a game for sure. Like I'm just trying to play the game to like have the lifestyle that I want for myself. And so like, yeah, it might be a Ponzi scheme. So like you have to kind of factor that into your analysis where like, you know, they can pull the rug at any moment. I mean, they did pull it last year. I know a lot of people that are casual stock market observers like were like, oh my God, I can't believe I lost half my money in a month. I'm like, welcome to the stock market. I mean, this can happen, right?
Yeah.
So I think because the market has gone up so fast in the last year, there is a lot of complacency, right?
Yeah.
And that gets back to like what Livermore was saying, where at the end of a bull market, you don't necessarily need the market to crash right away. If it just goes sideways and there's no action, then I mean there's going to be a problem. That's kind of what happened in 2007, where I know in the book The Big Short, where not only was Michael Burry talking about this and some of the analysts that were sort of bearish on housing, but they were saying like the triple B rated bonds or all the bonds that they were shorting, the housing prices didn't necessarily have to collapse, but they just had to go sideways and stop increasing. And then there's going to be a problem. So I'm kind of looking at that kind of in the same light where like, especially, crypto is a good area where you can apply that sort of analysis to where like the leverage has come completely out. And like, where's Ethereum? I thought Ethereum was going to 10,000. Like, I think it's below 2 now. I don't know where it is, but
that is.
There's so many people that were super leveraged in ETH, and like I don't know where they are now, but I mean their psychology must be really messed up because like I don't know how much money is going to take to get ETH back over 4, let alone like 10. Like I hope it gets up there because there's going to be a lot of opportunity in the Bitcoin and Ethereum miners. But I mean, this is the thing where we are in the sort of the cycle here where there's already been a lot of money lost recently in crypto and in a lot of the meme stocks. So there's been a ton of money lost. And so there's already some people that are getting like a little bit scared. And so it's not, I don't think it's going to take much. I'm just talking about the general market, right? But this definitely is going to affect gold and silver. So like people need to at least have that in the back of their mind where like just because gold and silver has been around for a long time and they are in bullish technical structures, like in a macro sense, there is a chance here where there could be a kind of a shakeout, like you say, or like one more big opportunity. And I'm definitely looking for that for sure, because I'd like to take advantage of that. But yeah, I mean, definitely, yeah. This Ethereum chart is
Well,
amazing. Look at that wick. Like,
yeah, I
wow.
know. It's like
That's
the market saying, no,
$1 man.
no, you're not
Woo.
closing up. But what I've noticed, I did a few studies on parabolas, like parabolic runs. If you correct about over 70%, some people say 80, but it's game over for the time it took to go up and down. You need a multiple of time to recuperate. So as Ethereum, if it goes down 70%, I'm saying it's done for a while. It's going to be done for
Yeah.
like for about a year or 2 years before it comes back.
It could be back testing too. Like you can see, like it would be an incredible back test, but like you see where it broke out of the large cup, right, or bowl pattern, like it could back test. Yeah, like what is it, 1,000? I think there, something like this, where you'd
Yeah,
have a back test of the cup, and so like that would be there could be some decent setups there, and I don't think that would be out of the realm of possibility. But like how many people like
I
are
know.
trapped in somewhere in that wick there?
Ah,
Like
and
that is an incredible, that should be framed. I think somebody, I'm sure
ah,
somebody framed that, but that is a cautionary tale to say the least.
yeah, definitely. Man, Edward, I could speak. I just look at the time there. I took like
I
over an
know.
hour of your time.
I was gonna, no, it's cool, man. Initially, I think I was like, we talked that we were gonna try to keep it brief, but
Half an
um,
hour.
yeah, you said half an hour, yeah. So, but no, it's been amazing, and it's awesome to chat with you. And anytime you want to chat, we can definitely see if it works out or not. But
Yeah,
I really respect your work, and I know Kevin's done an amazing job, and you guys are really good friends, and
yeah.
the both of you have done a tremendous amount of work on social media, and a lot of it has helped me out over the years. So whatever I can
What?
do for you, man, it's all
You've
good.
been helping me, Edward.
I know. I'm trying to be humble as possible. I'm just one guy. I'm not reinventing anything.
Yeah.
I'm just taking what the textbooks are saying and sort of applying it in real time. And
But it
I
helps. It
really
helps.
appreciate that you get a lot of value out of that.
Uh, because the textbook, sometimes you read it, it's hard. It takes years of experience. I reread some books 3, 4 times. That's what they meant. That's what they meant. But since I know your framework, I respect you. I know that when I look at your charts, I know you've done so much work behind them that I really take the time. I just don't glance at them for 30 seconds. I could stare at them. Oh, look, he put that line that way because for him, there's meaning to charts, and our role is to make them as clear as possible to not educate. Well, and like hopefully a spark in somebody is gonna light a spark in somebody, right? Because everybody's looking for a stock pick, everybody's looking for targets, but it's more than that. Like it's an opportunity to take your destiny in your own hand. So I'm happy you're sharing. I just saw you had 20K followers.
Yeah, thanks,
Congrats.
man.
I
Thank you.
followed you. You had less than 10.
Yeah, yeah. I posted something on my Instagram like where it took me 10 years to get from 0 followers to 10,000 because I built my channel just from scratch. I'm like I said, I did it initially just to as my own online diary to keep my own thoughts straight. But then like obviously as the years progressed, like more people came on and we all share the same ideas, which is amazing. But yeah, it took me 10 years to get from 0 to 10, but it only took me 1 year to get from ten
Yeah.
thousand to 20,000. So like there's something there like where you could say like maybe my ideas kind of coalesced with enough people where it sort of hit some kind of nerve. But there's a ton of people like you have an amazing amount of followers and a lot of passionate people, and there's just a great community on
Yeah.
social media that are helping each other. Learn technical analysis and share ideas. And sometimes I'll see a chart from someone where it'll spark something in me where, oh, I wasn't looking at it this way, and it'll help me add another tool, and it'll help me look at a market in a different light where I wasn't considering before. And this is all great because, like I said, before Twitter and before I was doing this way before, in the very early stages of the internet in the late 90s. I think a story I tell people is like, my family got fast internet really early on, like really fast dial up in like 96. And a lot of kids the joke, obviously, like, oh, I'm gonna go on to the internet and just rip music or watch like movies. And I think one of the first things I did was like look up stock symbols and like charts and graphs and stuff, because it really resonated with me. And then I got really mad because I'm like, why didn't they teach this in school? Like I got really hostile. And then like that's another thing, or like you're gonna have to do it yourself. Like there's no college course that teaches technical analysis, because like I think if there was one, it would be like the most expensive tuition there is, because like there's no like, what do you call it, silver bullet or whatnot. And like you were saying, like technical analysis, in my opinion, is like the best form of entrepreneurship, because it's like running a business, right? Like I consider what I'm doing like a business. I'm not doing it as like a hobby. So it's like you want to have like, you know, tight rules and all this kind of thing. And it definitely sharing my charts has helped refine my skill, I guess you could say. So
Nice.
I really appreciate the kind words, man. But I respect all your work an unbelievable amount. So it's very humbling that
Wow.
you get any kind of how you can say, like any kind of information that's helpful out of the work that I'm publishing. So
Your charts are brilliant, brilliant.
thank you,
And
Patrick.
and yeah, I try to imitate sometimes. Like I went down the pitchfork rabbit hole, but you can tell
Yeah,
me if I'm doing them wrong.
yeah, it's not for everyone, and sometimes I use like I might not. Some people that have used pitchfork analysis for a long time, they might notice like I'm not going straight. There's a certain textbook way where you should be applying the pitchfork in your analysis, but sometimes I use a little bit of like licensing, and because sometimes when it fits a certain way, because I use it as more of like, when you're looking at the bottom rail, it's more like a trend line. So I'm trying to see like where the trend line fits, because if it gets, say if the trend line of the, like say we were talking about Bitcoin earlier, say if Bitcoin penetrates the lower rail of the pitchfork, that's a real big warning sign where it's like hands off, right? And you got to see where it might fall to. And it's just a guideline. So yeah, I mean, I wouldn't recommend pitchfork. It just kind of works the way my brain interprets the information of the market. It sort of fits with the way I look at things, but it's not. It's definitely not for everyone.
It's well, look, that's another TA. There's so many tools. People could get inspired by somebody else, but at the end of the day, they have to choose tools that fits their personality, time frames that fits their personality, because
Exactly.
you have to trust, like, you know, but that's years of experience. You fiddle around, and there's stuff that makes sense. Like, and some people love moving averages. Some people love arcs. Speaking of arcs, Kevin was mad at me because he wasn't, because for him, he's in Britain, so he was sleeping. But
Yeah.
I was so happy you said yes. I didn't want to challenge you with the hours, but if we're gonna do it the next time, if we could make it an hour earlier, Kevin, he would have loved to spend some time with you also there.
Yeah, that's awesome. That's really he's done a tremendous amount of work, and I know a lot of people around the. It's not just like there's people all over the world that are following him, and he's helped a lot of people. Like a lot of your work and his work. Sort of. I was looking at silver and gold. It helped me when you guys had the parabolic arcs and everything like that, and it made me like sort of take a step back and look at it from an even larger time frame. So yeah, that would be amazing. So yeah, maybe one day we can definitely hopefully get together and do a triangle of gold analysis or something like that.
Man, we could do it on your channel, my channel, whoever. I'm just or offline.
Probably you, because you've done such a great job, sort of keeping me on a leash here and helping me get through. We've been talking for an hour and a half, so that's pretty funny, because we talked about this, where if we start talking, it might go like this. But this is what happens when you get two people passionate about markets. I'm sure we could talk all day, but yeah, I don't want to keep you up, because I know, what time is it in Quebec? It's like what is it, 8 o'clock already?
8:20.
Yeah.
Well, I was gonna have a hard stop when my kids start crying and they're coming upstairs to sleep. That's when I would have said, "Okay, Edward, that's it." But no, we'll stop it now.
Yeah.
I'm gonna upload this, and hopefully everybody's gonna watch from A to Z, because there's tidbits of beautiful information in there that I'm gonna rewatch this for sure and listen to it.
Oh,
And
thanks a lot.
I'll try to.
Hopefully it came across okay, because like I have like ADHD, so sometimes if I might go off in some tangent or whatever. So as long as we're focused on the market, then it's like what do they say? Not laser eyes, but like a laser focus. You know.
Yeah, it's awesome. All right, Edward. Man, it
Thanks a
was
lot.
an honor, a pleasure.
Oh, the honor is all mine. Believe me, I really appreciate you taking the time to speak with me today. So
I'm gonna book you right away. After as soon as we finish talking, I'll send you an email. When do we do this next time?
all right,
All
you
right,
take
Edward.
care. Have a nice night.
All right, you too,
Bye.
sir. Ciao,
Bye.
man.